Hello everyone, welcome to Optiongig. This is your host Vivek, part-time option trader and full-time worker, husband and father. If you also want to generate consistent monthly income trading options while working in your regular day job, then join me in this journey. Hello everyone, thank you for tuning into Optiongig, and this is your host Vivek, and I wish you a very happy new year 2020. I hope you all are well rested after the deserved holiday break and are ready to go roaring into 2020, and I wish that 2020 turns out to be even more profitable for all of you. This is the first weekly summary update from Optiongig. And since this was the first week, it actually straddles over 2 weeks. Instead of doing the weeks combining 2019 and 2020, I thought I'll do the first weekly summary starting from 1st of January 2020 to the end of this previous week, which is January 10th. So today the summary that we're going to present is from 1st of January to 10th of January 2020. Alright, as always, let's first see what were the major market headlines for the last week. Top one, war, tensions. But come war or wages reports, the rally just keeps rolling on. We saw Dow hitting above 29,000 briefly last week. Even though earlier there were escalations, there were tensions about US-Iran war, but those dissipated as the week moved on. And market kept chugging along, onward and upward. That's the only direction market knew last week. All right, oil also declined 6%, excuse me, on de-escalation of tensions between US and Iran. For a moment, everybody thought we're getting into World War III and oil jumped higher. But then when both US and Iran decided that they're going to hold back on the escalation, oil declined. Also, last week we had a jobs report. It had shown a moderate slowdown in the number of jobs gains as well as the wage growth. It was expected to see a moderate slowdown as compared to the last month, which is a November month, because November month is a Thanksgiving shopping. There's a lot of temporary jobs that are created in the retail sector during that month. So generally you will see that the December job growth is a little less than the November job growth. So again, no surprises there. The job growth was as per expectation and it showed up in markets. Market continued to move higher. Alright, the other factor contributing to market keep going higher is our consumer spending. Consumer spending continues to be strong in December. This strong engine of US economy continued to chug. It kept chugging, and so the market. Lastly, I want to talk about the game that Fed has been playing in the repo market. Again, Fed injected another $80 billion plus in repo market and also gave an indication that they are open to do more capital injection in the repo market if the need arises. What happens when you add more money in the repo market? Money printing, cheaper money available for corporates. Corporates use that money and most of the money flows into buybacks. And we have seen the results of it ever since Fed started injecting money in repo market in September. So, and we all know what happens to the market since then. All right. Do I think the market will continue to go higher the way it did in 2019, and should we expect the similar gains in 2020? No, I have no idea where the market will go. But I'm glad that the option trading gives us the tools to manage our portfolio irrespective of where market grows. So I am ready for the dreaded R word. We'll see what happens. All right. Despite all these market headlines, what happens to the major indices? So let's look at the major indices. First, the spiders ETF based on S&P index. Little change from a, like, it just went only 0.5%, opened at 323.54 and closed at 325.71. 2.17 points of change, or 0.67% positive. The Dow Jones, almost similar, opened at 286.44, closed at 288.24, up 0.62%. Technology sector continued to show the strength that it has been depicting for past few weeks, and the Nasdaq ETF QQQ opened at 214.40, closed at 218.43, or a gain of 1.84%. Lastly, IWM opened at 166.74 and closed at 164.89, the decline of 1.12%. This was the only broad market ETF that declined in value. Tech showed the most strength, rising up almost 2%, while SPY and Dow Jones Index largely unchanged. I mean, 0.6% gain only. Alright, so in this market condition, how did we do? So here's my trade summary. Overall, I closed 29 trades, out of which 23 trades were closed profitably and 6 were losing trades. So 23 out of 29 trades, 79% winner. I'm pretty happy about it. And we also opened 44 new trades. That includes the net new trades as well as the trades that we might have rolled or hedged. Again, so the February expiration was close to 45 days last week, which is the perfect time, optimal time for us to open up a new trades for those who are option premium sellers. So I wanted to open up as much trades as I could, given the market conditions, given the implied volatility, given where the ETFs or the particular stocks are trading. So pretty active. I was pretty active in trying to open up new trades. So we opened up to, in total, 44 new trades. All right, now let's get into the details of some of the trades. First one, let's look at the profitable trades. So the first one that I want to talk about was the bullish trade that we had opened up on Slack, ticker symbol WORK, work. I have been bullish on this particular ticker. I've been bullish on the Slack product. I use it for my personal work as well as in my office work. We do use Slack and I love it. And I have been maintaining a bullish stance on this particular ticker for quite some time. So we had sold a put with a strike price of 22.5. We had sold a put on 6th of December. That's when we opened this trade. And on 3rd of January, we closed this trade and the return on capital was almost 10% within 28 days in the trade. So when we sold the initial put, we collected $1.44 as a premium, and when we closed the trade, we closed it at 91 cents, and the difference we pocketed as our profit. Good enough. I had sold 4 contracts, so we made close to $200+ on this particular trade. Interestingly, when I opened the trade, Slack was trading at $22.97. I was bullish on it, but the stock did not cooperate. When I closed the trade, the stock actually was trading lower. It was trading at $22.57. And this is the reason why I got attracted to option trading, is even if you are wrong, in your analysis in the direction, you could still make money. If I had bought the stock outright, I would have been sitting at losses. But instead of buying the stock, I gave myself some room for error and sold a put instead. Even though the stock has moved down, I still made money. Alright, the next one I want to talk about was the trade that we closed. It was a TLT. It's an iron condor on TLT with a strike price of 135 short put and 140 short call. So the initial trade that we put along had a short strike prices of 135 short put and 144 short call, but TLT moved way down. So as a part of our hedge, we rolled down 144 short call to 140 call, and we collected additional premium. And in the last few days, TLT again rose a bit higher on the tensions between US and Iran, and the trade became profitable for us, and hence we were able to close this trade at $202 profit, and the return on capital was almost 7% within 31 days. So we opened the first trade, the initial trade, on 6th of December. We closed this trade on 6th of January, stayed in the trade for 31 days, and generated almost 7% return on the capital employed. The third trade I want to talk about was the closure of a bullish position on BABA. The ticker symbol BABA, company is Alibaba. I've been bullish about this company, so I sold a $205 short put at $205 strike price and collected $3.60 as a premium. I opened this short put on 3rd of January, and stock cooperated with us. When I opened the trade, the stock was trading at $217.83, and BABA continued to move higher because of the trade one deal that almost seemed imminent to be signed. So all the Chinese stocks were on fire, so was BABA, and in this case, unlike what we saw in Slack, in this case stock cooperated, and within 6 days I was able to close this trade at a profit target which I was comfortable with. So return on capital was almost 4% within 6 days in the trade. I'll take it any time of the day. And since I continue to maintain bullish stance on BABA, I opened up another trade at a little higher strike price. So these were the top 3 trades, profitable trades that we had. Once again, the first one was a short put on Slack that we closed profitably for $212. The second one was an iron condor on the bonds ETF TLT that we closed for a profit of $202. And the last one was a short put bullish position on BABA that we closed for a profit of $153. All right, not everything was all rosy, so we had our own share of losers. So let's look at losers. First one, top of the chart, is a BABA. Surprisingly, we made money in BABA, and also we lost money in BABA. I'll explain how. So we had a short call on BABA at a strike price of 195 that we earlier had in December. Then we rolled it out to January. So the short call, we had collected $11.34, and we had a short call at a strike price of 195. As I explained, BABA had been moving higher and higher and higher. So eventually I closed this trade when BABA was $222.42. I had initially collected $11.34 as a premium, and when we closed the trade, we had to close it at $27.55, hence incurring the loss of $16.21 on this particular trade. Am I sad about it? Absolutely not. Why? Because the reason why I put this trade to begin with was I'm holding long shares of Baba in my other portfolio, and I wanted to get rid of those shares of Baba and instead convert everything to options. But instead of selling the shares outright, I had actually sold this covered call, and my assumption was that if Baba rallies to 195, I will close this trade at whatever loss, this particular trade, but I will make more than enough money on my long portfolio by selling the 100 shares of Baba that I hold there. So even though I lost money in this option trade, I more than compensated for it by selling the long shares that I held in the long portfolio. I sold off the moment I closed this trade. So this trade did what it was supposed to. Even though if I just focus on only the option trading account, it might shows up as a loss, but my overall portfolio, it did what it was supposed to do. And you would see me doing this many times, wherein I have a particular stock or position or a long position on a stock or ETF in my 401k. I would turn around and do a covered call, a call selling in my option trading account, that in case if the stock rises, then I will close the option trading, the option trade, and I will sell the long holdings in my 401k. And this is exactly what happened in case of Baba. The second one I want to talk about was a loss that we saw on when we rolled the short put on green dot. Again, the ticker symbol is GDOT. I've been bullish on this particular ticker, and we opened a bullish short put position on 12th of December. But during the holidays, the CEO of Green Dot resigned and the shares plunged. So our bullish position was at a 25 strike price, and the share went down to 22, 23. So since January is coming to, we are less than 2 weeks of expiration for January, it was best to start hedging our trades. That means either putting up a untested side trade, or if we can roll it for a credit, I would rather do it. This is exactly what I did here. I rolled the trade for additional credit, which means I had to close this current 25 strike January expiration short put trade for loss, but I collected more premium to cover up for that loss for February expiration trade. So this loss that we incurred is a part of our rolling trade. I still continue to maintain the bullish stance on this particular ticker, and we will see how the 25 short put trade for February expiration behaves later. Again, even though it shows up as a loss for this particular trade, overall the trade I haven't still closed it because I still have an open short position on Green Dot for a strike price of 25. Right, the third trade that shows up as losing trade is a TLT. This is the part of the TLT iron condor that I closed. Remember, I had told that we had to put up a hedge trade when we rolled up 144 short call. Sorry, when we rolled down 144 short call to 140 short call, and we collected additional premium of 25 cents. Guess what? TLT actually moved in our favor, means it was way down at 135 when we opened this trade, and it was challenging on the put side, the short put strike of 135. That is why we did this roll down of a call as a hedge trade. TLT started moving up, so it moved to $138.76, and when we closed the overall iron condor, this 140 short call also got closed along with it. Even though we lost money in this particular short call side of the iron condor, we made more than enough on the short put side of the iron condor to compensate for it. And overall, we exited TLT iron condor at a profit. So if we really want to add the numbers, the put side, when we closed it, we made $202 in profit. But when we closed the call side, we lost $106. So net we made close to $100 on TLT, and I'm pretty happy about it. All right, next, the new trades that we opened. First one is a trade that we rolled from January to February. This is a bullish trade, a short put trade on Stamp, ticker symbol STMP. I rolled up the 85 short put on Stamp from January expiration to February expiration, and I collected additional premium when I rolled it. So as it stands today, we have collected more than $9 as a premium for a short put at a strike price of 85, and when I opened up this trade, Stamp was trading at $82.55. So we have a large amount of buffer. Our break even is close to $73 on this particular trade. The second trade that we opened on 6th of January I want to talk about is a vertical bullish short put spread on Intuitive Surgical, ticker symbol ISRG. I am bullish on this particular ticker. I had closed the previous trade for January expiration at profit, and I continue on to maintain a bullish stance on this. So I opened a put vertical spread, means we short the put, we sold a put at a strike price of 580 and bought a put at a strike price of 555. Thus created $25 wide spread and collected $7.15 as a premium. So overall risk in this trade, overall capital deployed in this trade is $2,500, because that is the width of the spread, and we have collected $715 as a premium. Again, I will watch this trade and we will close it at our profit target of almost 50 to 60% of the max. Means if I'm making close to $400 on this, I will close this trade. $400 on investment of $2,500 within 30 days, not a bad trade at all. But we will see how it goes. The third trade I want to talk about was a very tight iron condor on ETF XLY. So we sold an iron condor with a short strikes of 126 and 127. That is why I'm calling it as a very tight iron condor. The stock was trading right in the middle of these two. It was trading at 126.46, and I just wanted to maintain a completely neutral outlook towards the stock. So I did a short put at 126 and the short call was at 127, and we went out almost $7 to buy cheap protection. So the long put is at 119 and the long call is at 134. Overall, we collected $3.35 as a premium, and this is XLY is one of the core ETFs that I would always like to have position on it, and also its IVR was higher, so it was a good trade, decent trade I would say to begin an initial position. Again, I have kept some room for laddering on the trade later on if stocks move a lot from this particular strike price. This is the initial starting position, and we have a more room to ladder on and put additional trades if stock moves. All right, so that brings us to the end of all the trade discussions. As always, if you have any questions on these trades, or if you have any questions on your own positions, do write to me at optiongig@gmail.com. I love receiving emails from viewers and listeners and would try to help you out as much as I can. Again, just a reminder, these trades that we discuss are the representative of some of the trades that I do. Overall, like I had mentioned, we had closed 29 trades. Obviously, I cannot discuss all the 29 trades on the show, so I will pick up the top 3 trades to discuss. But if you want to follow all the trades that I'm doing, you can go to my website www.optiongig.com/trades. You will see a link that will take you to the trades for a particular day. Again, the site address is www.optiongig.com/trades. I think that's all I have for today. If you have any questions, do write to me on an email, or if you're watching this on YouTube video, do not hesitate to put comments on it. Thank you very much, and I will see you in the next update. Bye-bye. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.